Can you just take us through
what
the overriding story is here? Is this one where it's a tale of consumer weakness, macroeconomic concerns globally? Is it a supply issue? What exactly is driving such downside in oil prices right now?
Yeah, I mean, look, it's definitely been very sudden. And I think it's a combination of factors. One of the things we are picking up that refineries who were supposed to come back from maintenance have been pretty slow in coming back. Runs are definitely underperforming expectations. A combination of we had a bit of weaker refining margins. That's part of it. Part of it is just more technical issues that we keep seeing since COVID, really. I think that's been a big driver on the demand side. Supply, seasonally, supplies always rise this time of the year. Canadian production is at its peak at November, December. U.S. production has surprised to the upside, and that was contrary to our expectations. We've seen productivity increases more than expected from the Permian, for instance. Bakken, they've been running down DUCs to record low levels, but then that's also not sustainable, right? We're not going to see a repeat of that this next year. Brazil, Guyana, we were expecting big production growth, but that's definitely coming in slightly higher. So all of that combined, we are seeing a softening in fundamentals. But having said that, we are still seeing counter-seasonal draws in Q4. The draws were meant to be a lot bigger. They are less now, but I also don't think, it's not, the price action suggests that, there's going to be a huge build in inventories. That's not there yet. Yes, in the first half of next year, we will. That's seasonal. But there's a bit of a mismatch between price action and fundamentals as well.
The price action indicates at least that we will see some of these lower prices, as you point out, over the next few months, and then maybe a ramp up again, seasonally speaking, as we head towards spring and summer. What exactly does this mean now for fuel prices, specifically for retail customers around the world? I know here in the U.S., we are seeing oil prices drive lower unleaded gasoline prices. I just filled up this morning, and I've paid the lowest I've paid in a few weeks. Can we as retail consumers expect some of those gasoline trends to continue?
So gasoline actually had come off much more sharply before crude had. And I think that's what the gains you are seeing at the pump, as in gains for you as a consumer, you're seeing at the pump by pump prices being weaker. But what we have seen as crude prices have come off, that gasoline and diesel have both actually headed higher, which is what gives me confidence that demand actually is still okay. And I also think that's why a big part of the crude decline has been positioning-led, producer hedging-led. But what I would say for you at the pump, and generally for consumers at the pump, is that we're not going to see as big a decline in gasoline prices. Winter gasoline is always cheaper than the summer, just because spec-wise it's easier to produce. But actually, it's not going to come off nearly as much as crude because fundamentals there are stronger. And again, because demand is holding up okay.
And Amrita, we're about a week or so away from a big OPEC and its partner country meeting. At what point do prices on the downside make OPEC and its partner countries rethink what their supply strategy currently is and what it could be in the coming weeks?
I mean, look, this price action, and again, it's not that OPEC are targeting a certain price, they never do, but it's the momentum, right? The scale at which prices have come off. It worries everybody, right? Even as analysts, we're like, okay, what are we missing? Of course, they are looking at all the numbers, they're looking at the factors. Is it actually fundamentals, or is it much more to do with positioning? If it is positioning, there's nothing much they can do about it. We still believe, and we continue to believe, that OPEC Plus will do what it takes to balance this market. Saudi Arabia and Russia have voluntary additional cuts in place. We believe they will likely get extended next year, at least through Q1, because that's seasonally the weak period as well. And that should help stabilize prices. And then, like you said, as fundamentals pick up in the year ahead, that we're going to get prices pick up as well.